ITC stock plunged 7% since Monday, July 24th, the same day when the company's board approved a proposal to separate its hotel business from the core businesses of cigarettes, agriculture, and FMCG. Under the new scheme, shareholders will own 60% of the demerged entity directly, and the rest through ITC Holdings. The demerger was seen as ITC's attempt to consolidate and strongly shift focus on its core business. The hotel segment of ITC contributes 4% to the top line, but accounts for 20% of the capital expenditures. This disbalance was a drag on the balance sheet, and therefore the demerger was seen as an attempt to restore balance in the balance sheet. But instead, the market did not respond well to the news. ITC shares plunged almost 4% on Monday, from 499.7 to 471.35. At 1 p.m. on July 25th, the stock went down further to 458. It's surprising because the stock was amongst the best performing stocks last year, surging 56% from February 2022 to July 2023. So, what went wrong? Well, experts believe that ITC's decision to hold 40% of the new unit was the immediate trigger for selling the stock. They feel this decision was taken to wield a controlling premium and hence preventing British American Tobacco, the other large shareholder, from selling its share in the hotel business to a third-party outsider. Prashant Tapse, Senior Vice President and Research Analyst at Mehta Equities, told Mint that ITC's hotel business demerger approval may unlock shareholder value with direct stake in the new entity, but it disappoints street expectations. Clarity of the scheme of arrangement of the shareholding is awaited until the board meeting and the stock faces technical pressure. The message is clear. Unless ITC clarifies the shareholding structure of the new hotel entity, the market will be rife with rumors and speculations that would drive the sell-off. Key concerns of the shareholders are swap ratio of the existing shareholders in the new entity, clarity over 40% ITC stake, and finally, clarity on strategic investor and the valuation of that investor in the newly created entity. Analysts have also cautioned that the share price near 450 warrants caution and observation for potential volatility. ITC's demerger is essentially part of the larger trend of consolidation happening across the industries in India. In times of credit crunch, driven by high interest rates, frequency of mergers, demergers, and acquisitions have increased in the Indian businesses in the last 1 year. From Reliance Financial and Retail to HDFC Bank to Manipal Temasek, LTI Mindtree, Kotak Sonata as few big-ticket examples in the last 1 year. Although consolidation is always meant as a focused and cleansing exercise for companies, shareholders do not always reward, like in this case of ITC. The ITC board meeting is on August 14th, where the company is expected to give more clarity on structural arrangements. But till then, ITC could be amongst the few dynamic stocks in the coming weeks.
Should I stock up on some global brands?
Diversify investments with global stocks. Invest.
Diversification is interesting. Should I invest in global markets?
You only progress when you ask better questions. Mint. Think ahead, think growth.